Hi there, welcome back to Market Fatafat. Thanks so much for staying tuned. Let's keep it going with all the big buzzers in today's trade. And one pocket of stocks that is negatively impacted today, deeply in pressure, is the city gas distribution companies, the likes of IGL, MGL, even Adani Total, deep in pressure today. Now, IGL and MGL have announced a further 20% and an 18% respective cut in the domestic APM gas allocation. The domestic APM gas is cheaper gas available with these companies, with prices capped at $6.50 per MMBTU. Now, if the price hike is not taken by these companies, this will impact their margins going ahead. Lower allocation increases dependence on higher priced new well gas or difficult field gas or spot gas. Now, new well gas and spot gas prices are roughly around 9% and $9 and $14 per MMBTU. And remember, on the 16th of October, CGDs had witnessed first steep cut on APM gas allocation of 20%. Now, gas cost for CGDs post the two cuts in APM gas allocation will increase by 5.5 rupees per SCM. That's a big spike coming in, and CGDs will need to increase CNG prices by as much as 9 rupees per kg to completely pass on the impact of this price hike and the cut in the allocation that they're getting from the authorities. On the back of that, 13.5% lower is where MGL is. IGL taking a deeper beating, almost 19% lower is where that stock is today.
Well, MGL and IGL both under pressure, of course, like Snehi mentioned, on the back of the further APM allocation cuts. But Prabal Sen sees value in some of these stocks. Let's go across and listen to what he had to say.
So it will really be a function of how you can actually fill this shortfall that is now coming up, plus what the differential with alternate fuels is. But we do feel that over the next at least 6 to 12 months, the margin profile will definitely trend downwards. And then we'll have to see what is the new normal as far as a sustainable margin environment is for all the three companies. Of now, as an investment option, yes, I think OMCs probably look more favorable. Marketing margins are still at fairly high levels. GRMs have started to recover. So to that extent, I think OMCs perhaps would be a more better of a tactical buy. We need to probably look at Gujarat Gas, MGL, and IGL in that order. As far as preference goes, as rightly mentioned, Gujarat Gas obviously has, in addition to being the least impacted by this move, because in any case, less than 22% of their volumes comes from CNG. So, the impact on margins and earnings, while it is still fairly significant, but over a period of time, I think that's something that they can, the percentage decline is something that can be offset by volume growth elsewhere.
Okay, that's the word coming in from Prabal Sen. But Ria, you picked out Nazara Tech for us. Tell us, it's an earnings candidate. Tell us what the numbers look like. We've also heard some announcements coming in for this company. So tell us everything about the earnings fine print then.
Yes, absolutely. So we've seen a weak set coming in for Nazara Technologies in the second quarter of FY25. Now the revenue has gone up around 7.5%. Even the net profit has gone up around 31% on a year-on-year basis. But we've seen the EBITDA declining by around 6%, coming in at 25 crores versus 27 crores in Q2 of last year. Even on the margin front, we have seen a contraction of around 111 basis points, coming in at just about 7.9% in this quarter. Now further on Nazara Technologies, they have approved the merger of its wholly owned subsidiary called Paperboat Apps with the company, and they have also approved a preferential issue of equity shares. So that is the news coming in for Nazara Technologies. Now the stock had fallen around 3.5% in early trade today, but right now it has bounced back up around 1% in trade.
Right, moving on from Nazara Tech to another earnings candidate that is Avanti Feeds, that was up and away almost 4% in trade today, in the morning's trade today. On the back of its quarter two results, strong set of results coming in. The net profit saw an uptick of a good 53.1% on a year-on-year basis at 114 crores versus 74 crores. Also, the revenue saw an uptick of 6% on a year-on-year basis at 1,355 crore rupees. The EBITDA also saw an uptick of 44.4% on a year-on-year basis, and the margins have also seen an expansion of 266 basis points on a year-on-year basis at 10% versus 7.4% in the previous year. Now, on the back of strong set of results coming in, a jump in the profit of almost 53% is what is powering the stock. It is trading with gains of almost more than 3.5% right now.
Okay, so Avanti Feeds holding up well. Let's also also talk about another stock that's holding up pretty smartly. 3% higher is where this stock is, and that's Hero Motor. This is another stock that is helping the Nifty in today's trade on the back of some very good set of numbers coming in. Revenue has come in at 10,463 crores, which is up more than almost 11% rather on a year-on-year basis. That is above the street expectations. Net profit has come in at 1,204 crores compared to 1,054 crores, which is up 14%, yet again above the street's expectations. EBITDA has also gone up by 14.1% and has managed to surpass what the street was expecting. However, it's the EBITDA margin that has actually come in below the street expectation. It's come in at 14.5% versus 14.1%, which is up only 43 bips on a year-on-year basis. Now, what brokerages are making of these numbers? Nomura has maintained a buy rating, hiked the target price to 5,805 from 5,663. A very significant upside coming in from the current market price. They believe that rural improvement is a key catalyst. Q2 was largely in line. Healthy earnings growth and attractive valuations is what the company has shown, and margins have room to improve further. They expect the two-wheeler industry to grow 10% over FY25, FY26, given rebalancing of growth and positive monsoons. They also say there are some early signs of rural pickup which will support sales. So Hero Motor Corp up on the back of a positive brokerage note and good numbers, 3% higher is where the stock is.
All right, moving on, and we are now joined by Sameet Chavan, who's the head research of technical and derivatives Angel One, who's also joining us on the show. Hi, thank you so much for joining us, Sameet. Your stock is NTPC is what you have picked out for us. Can you tell us what are you penciling in on the charts for this one? In the last 6 months, we have been seeing this stock in a consolidation mode. Tell us from here on, do you see a reversal coming on this?
Good afternoon. See, most of the PSU stocks have undergone a decent price correction in last 1.5 months. This stock, in this process has first breached its important support of 400, and today, with today's price cut, this stock has also sneaked below its important sacrosanct support zone of 200x simple moving average, which is placed somewhere around 372, 375. So overall, the chart structure, at least with the short-term perspective, looks weak, and any bounce back from current level is likely to get sold into. Slowly, steadily, we would expect this stock continuing this downward move, wherein the next important support to watch out for would be around 355 to 348.
Okay, those are the levels to watch out for an NTPC. Ria, you picked out DLF. That's on the back of a brokerage note, and Nifty Realty is also a sector that's doing really well today. Tell us what the brokerage note talks about, and what's the reason that the stock is doing well in trade.
Yes, absolutely. So CLSA has upgraded DLF today to an outperform rating, raising the target price to rupees 870 amid the strong demand that they have seen for the ultra luxury residential project. Now, channel checks with property brokers in the NCR region indicate that DLF has received expressions of interest or EOIs for over 100 units out of the total 420 available units, amounting to more than rupees 8,000 crores, which is approximately $1 billion. Now, notably, the conversion rate for these EOIs stands at approximately 80%, which underscores the strong buyer commitment. And this unprecedented demand is particularly remarkable given that each apartment is priced upwards of rupees 80 crores, which is over $10 million. And these likely sales figures surpass the initial assumptions for FY25, which further reflects a significant uptick in the luxury real estate segment. We've not seen a big reaction on the stock on the back of this, but it is still up around 1% in trade right now.
All right, moving on to another earnings candidate that has done pretty well for itself is Soba Developers, that has rallied 6% in the morning trade on the back of Q2 profits that climbed 75% on a year-on-year basis. Let's look at the other numbers as well. The revenue also saw an uptick of 26% on a year-on-year basis, coming in at 934 crores versus 741 crores on a year-on-year basis. Of course, the net profit was up 74% on a year-on-year basis at 26 crores. The EBITDA saw an expansion of 2.3% on a year-on-year basis at 77 crores, and the margins also, the margin, however, took a beating, which was down 191 basis points at 8.3% versus a 10.3% on a year-on-year basis. But largely a good set of numbers coming in for Soba Developers. The stock has given up the earlier gains, is currently trading with gains of 0.8%.
Okay, so that's another stock from the real estate pack that's in the green, albeit nominally in today's trade. But Sameet, you picked out Infosys for us on the charts. Tell us what you're spotting on the charts for this stock, because it seems to be a steady mover. It's been giving good returns over the last 6 months, 1 month. Tell us what you are spotting going ahead as well.
Yes, since morning, if you see the entire IT space has been the real culprit, dragging Nifty lower. As far as Infosys is concerned, we believe that at least for next, 1 or 2 weeks, the stock is trapped in a range wherein on the higher side, 1880, 1900 would act as a very strong supply zone. And on the low side, whenever the stock again reaches is important support of 1750, 1730, some sort of buying traction is likely to emerge. So overall we expect some consolidation, wherein on the higher side some sort of supplies likely, whereas on the low side we could see good buying coming in around 1750, 1730.
All right, with that, it's time for a quick breather. Don't go anywhere after the break. We're getting you more stocks that are in focus. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the buzzing stocks, and let's talk about a stock that's likely in pressure in today's trade, and that's Dr. Reddy's Labs. Now, Dr. Reddy's and FDC Limited are recalling generic medications in the US market due to manufacturing issues. This is according to the US health regulator. And as per the latest enforcement report by the US FDA, the US-based subsidiary of Dr. Reddy's Laboratories is recalling multiple strengths of the morphine sulfate extended release tablets in the US. The medication is used to relieve severe and persistent pain. Now, as per the US FDA, Princeton-based Dr. Reddy's Laboratories Inc. is recalling 2,040 bottles of 15 milligrams of morphine sulfate extended release tablets due to failed impurities and degradation speculation. Now, the drug maker is also recalling another 530 to 100 count bottles of the medication in 30 milligram strength for the same reason. This is what the US FDA stated. Now, besides this, the drug regulatory body of Mexico has imposed a penalty of 27 lakh on the company for deviation from prescribed guidelines and filing information of import of a reference standard for one of the company's APIs. So, two negative flows coming in for the company, news flows coming in, and on the back of that, the stock is down 2% as we speak.
All right, moving on then. Ria, you picked out Hindustan Zinc for us. The stock is up 1%. Tell us what's the news flow here?
So Hindustan Zinc is up around 1% today, since the company has secured a composite license for a gold mining block in Rajasthan through the state government auctions held on the 13th of November 2024, and the company has been declared as the preferred bidder for the Dogoja gold block. And this strategic win marks a very significant milestone in the company's growth journey, since the company has now expanded its precious minerals portfolio. Now, earlier this month, Hindustan Zinc was also declared the preferred bidder for two tungsten and associated metal blocks in Andhra Pradesh and Tamil Nadu as well. So, positive news coming in for Hindustan Zinc, which is why it is in focus today.
Okay, so that's the reason why Hindustan Zinc is in focus. But Sameet, you picked out Info Edge for us. Now, while the stock has been consolidating over the last 1 month, 1 week, if you take a look at the longer term, in the last 6 months, in fact, the stock has gone up by almost 50%, 47, 50%. Tell us what's the outlook going ahead for this stock and what are the levels you're spotting?
So clearly, this stock is showing some, outperformance with respect to the, overall broad market sell-off that we've witnessed in last 4 to 5 weeks. The stock has been consolidating. So 8,500 seems to be a very strong resistance. Before that, 8,000 is the immediate hurdle to watch out for. However, it's been nearly 3 to 4 weeks. This stock has been continuously finding support around its 89 days exponential moving average placed around the 7,500, 7,520. Any weakness has to come in this counter. The stock needs to break 7,500 on a closing basis. Until then, it is likely to consolidate, wherein on the higher side 8,000, 8,100 would remain to be a very strong resistance. Low side 7,500 continues to be a key support for this counter.
All right, speaking of Info Edge, after seeing a pickup in the October jobs peak data, Pawan Goyal, Executive Director and Chief Business Officer of Naukri.com, says that hiring activity would have been stronger than 10% if not for Diwali this year. Let's go across and listen in to what he had to say.
If you just look at the trend line, the hiring activity is consistently growing now. So if you look at the H1 of this year versus last year, hiring activity is growing. So if one were to project out, one would think that the hiring trend reversal is here to stay. October is a month of holidays this year, whereas last year Diwali was a little later. So this 10% growth is not a comparable period. If one were to somehow normalize, one would expect this number would have actually been higher. So the hiring activity is more robust than what 10% indicates at this time.
Okay, moving on from InfoEdge, let's talk about Nalco. Sameet, that's the stock you picked up. Last 1 year, the stock is up 163%. More than double is what the return the stock has given just in the last 1 year. Do you expect this up move for the stock to continue, or do you now believe it's time for some sluggishness we can expect on the correction front? What's the view coming in? What are the levels you're spotting?
Friday's price movement, it was appearing as if the stock is heading for some sort of price correction. But the kind of, massive surge that we witnessed today itself since morning, looking at the robust volumes, it appears that when this stock surpasses 245, 246, this up move is likely to stay here. So, wherein on the high side, 260, 65 is the immediate level to watch out for. But overall, on the metal front, overall, if we look at the Nifty metal charts, they do not look encouraging at all. So at higher level around 255, 260, one should start booking some sort of profit in Nalco. And on the lower side, if you see, there's a strong support that has emerged around 220, 215 odd levels.
Yeah. All right, coming to you, Sameet, again, HDFC AMC is what you have picked out for us. Tell us what are you seeing on the charts for this particular counter. Now, today also it's declining in trade, but in the last 1 month also this has been in a consolidation mode. Tell us from here on, what do you see on the chart for this counter? Time for recovery?
As you rightly pointed out, this stock has been consolidating of late. Price-wise, the price configuration-wise, this stock has been oscillating within the boundaries of a triangle pattern, and now it is challenging its lower end. So it is trading around its make or break level, which is around 4100, 4050. If this stock continues this weakness that we have been witnessing in last 4 or 5 days, and the stock slides below 4050, it would confirm the breakdown on a daily time frame chart, and then probably the stock can slide toward 1300 also. So it is important to watch how the stock gives a follow-up move and whether it holds its important level of 4050 or not.
Well, thanks for that view coming in, Sameet. That's the last stock we wish to highlight on this edition of Market Fatafat. Riya, Sameet and Vaishali in the previous segment, thank you so much for joining us on the show. But as we wrap it up on this edition of Market Fatafat, my colleague Sumit Chaturvedi caught up with the CBDT chairman Ravi Agarwal for an exclusive chat. Let's go across and listen into a slice of that interaction.
We have actually on the portal, we have welcomed the suggestions, we have sought suggestions from the stakeholders. And let me share that we have got more than 6,000 suggestions from the taxpayers spanning different sections of the Income Tax Act and also generic provisions. Those are very good suggestions that we have received, and that is in fact encouraging because that reflects that the taxpayers are very positively actually looking at this exercise. Each and every suggestion of the taxpayer is being very seriously considered, and wherever appropriate it would be duly incorporated.
Sir, but does it this time give you some elbow room for changing the tax rates also, sir? That's the point.
So our focus is basically simplification of language, and that is what was also presented by the Honorable FM in the budget. So with that spirit, we are moving on.
So you just introduced you actually appealed that those who have foreign assets, they should come out and declare the income assets abroad. What is the reason behind it, intent, and what was the trigger point? Anything in particular?
So there's no trigger point as such. It is basically that we have started receiving information through automated exchange of information from different countries, wherein assets as well as income of different taxpayers that is being reported by such countries. So we compared it with our database, and wherever there were gaps, we thought that we would flag it to the taxpayers so that they would comply, and given sufficient time to the taxpayers for compliance.
So one last question on corporate tax and STT. This time you have a good collection, but do you think this time, this financial year, you'll be able to surpass targets even after the quarterly profit of corporates have come down?
So we are hopeful. We are hopeful that we would be able to meet the targets, and I think we're taking sufficient steps to ensure that we are able to meet the targets.
If you like this video, then like, share and subscribe to ET Now.